should you buy Microsoft? Ticker symbol MSFT. It's currently at $259 a share. We are going to be going through my discounted free cash flow model and Buffett Graham intrinsic value models to see if this stock is a buy based on its current metrics. We're going to be looking at Yahoo Finance, going through the income statement, balance sheet, and cash flow, putting these in our models and seeing what the fair value of the company is. So let's just have a little look at the stock price. It's currently $259 a share and 58 cents, up 1% on the day. But if we look to the last year, it is down 22%. We'll increase this a little bit more. Its all-time high was at around about $341 a share. It's down to $260. Is this the time to buy? Now, Microsoft has been in the tech downturn that has happened at the end of the year in the sort of recession that we're having now. Compared to the S&P 500, you can see it is actually slightly down a bit more, 22% to 20%, but the stock has been hammering the S&P 500 over the last 5 years, 60% up compared to 270 for Microsoft. So this stock is obviously really being an absolute killer for anyone who's invested in it. I bought at a very good time and sold a little bit on the early, but is this the time to get back in? That's a question I'm going to answer today. We're going to be going through my tracker spreadsheet. We're going to be putting all the numbers in. I'm going to be showing you what I do every day when I look at these stocks and do these videos and how we get the valuation. So I'll be putting this sheet on Patreon. I haven't done it yet. I want to tidy it up and make it nice and pretty, but that's what we're going to be doing. And firstly, give a like on the video. It helps me out, and subscribe if you're not already. So let's get straight into it. What do we do when we're looking at this? Well, we go to Yahoo Finance and we look at the financials and we get the revenue for the last 4 years. You can see Microsoft's revenue has gone from $225 billion to $192 in the trailing 12 months. So what I do with my sheet is I just paste it in here and get these values in. So this is the last 4 years of revenue. Next, we're going to be doing is looking at the profit. So where do we get the profit on Yahoo Finance? Well, it is the net income common stockholders. 39 billion to 72 billion. Profit is always increasing for Microsoft. This is the trailing 12 months here. The year end will be out. They release in June, so it will be coming out very soon. End of this month, I will be doing a video on that when it happens. But we're dealing with the trailing 12 months, which is the last 3 quarters, well, the last 4 quarters. And then when we get the final quarter, it'll give us the full year. But we're looking at the trailing 12 months right now. So now let's add in the profit. We just paste the values in here. Next, we've got shares outstanding. Why do we want these? Well, there's 2 reasons. Are Microsoft buying back their shares? That's the first question. And yes, they are. You can see it's gone from 7.6 billion to 7.5. So this one, I don't have a good way of doing it. I just copy them over one at a time. Unfortunately, Yahoo Finance doesn't put them next to each other, or I could extend my sheet, make it a little bit more easy, but we don't do it. So shares outstanding, how many shares are there at Microsoft? If you were to buy them up, this is obviously not in millions, it's in billions, but you can see it's decreased. Next, we want to go to free cash flow. Where do we get the free cash flow? Well, funnily enough, it's in the cash flow statement. Yahoo Finance are one of the few very nice ones who actually do this. Free cash flow is operating cash flow minus capex. The operating cash flow of Microsoft, 52 billion, 60, 76, and 87. And the capital expenditure has increased, as you can see there, 13 billion, 15 billion, 20 billion, and 23 billion. These are all negatives. Capital expenditures is money that they'd use on purchases of equipment. It's a negative, and what do you do with that? Well, then you get the free cash flow. Yahoo Finance already does this for us, so we don't have to calculate it. 38 billion, 45, 56, and 63. So let's grab these 3 values here and paste them in once again. So they're all the information that we need from the financials, and it gives us some calculations here. 35 average free cash flow ratio. On the most recent number, average is a lot higher. Now we want analyst estimates. We can use other estimates, but the analyst estimates do give us some good examples of what the revenue is going to do in the future. Then we go to the analyst side and we look for estimates. Now you can go low and high. I tend to stick with the averages, 199 billion to 227. So let's put those numbers in right now. So that was 199.01 billion, like that. I need another 0, too many zeros. That's a lot of money. And the other number is, I can't remember, it was 22706. So 227060, 1, 2, 3. And now we've got the analyst estimates in there. You could put higher estimates there than you want. I am going to extend this sheet so you do have both. And next, we need the weighted average cost of capital, which is the WACC. 2 ways to get this. You can either calculate it by based on the financials, or you go to somebody else's website and they've done it for you. So here, I'm going to take the mid WACC, which is 7.5%. So let's put in 7.5. And finally, we've got the expected growth. This is once again an analyst's estimate. Scroll down the bottom, next 5 years, 16.11%. So let's add that in there, 16.11. And the core bond is around about 4.4%. Now, you can use the bonds of the company. Microsoft is not issuing any bonds now, so I couldn't get that from our website. So we've got everything we want here, and we have this populated. Now what we do is we go to the discounted free cash flow model. This is taking the averages. So let me just put the averages in as they are written. These are the averages of those last years. And then we've calculated the future free cash flows, discount them today's value, take off perpetual growth, WACC, shares outstanding, market value. And what does that give us as a value for Microsoft? Fairly valued 257. So according to discounted free cash flow based on the averages, Microsoft is fairly valued at the minute. Now we can tweak these numbers. So what do we want to do? Well, you can see that net income has actually been decreasing. So maybe we want to decrease that number a little bit. Let's go to about, we'll take out the 102 and we'll just take an average. In fact, let's just put this at 90% because it's probably going to be there. Revenue growth rate has increased. Now the analysts are expecting it's lower in 2020, well, this is 2023 now, or in the year end in 2022, but let's just say we're a bit more bullish on that. Let's say that was about 10%. That would increase the averages a little bit more. So let's up this to about 15, which would be that, which would be the highest year. So this increase there. And then net income margins. Now these have been going up, so you maybe want to take an average of that. So let's put this to 35%, see what that gives us more. And that has actually put the stock down. Now, why is that? Because the revenue was down. So let's just go back again and put this to 94. Revenue to take cash flow, once again, fairly valued. So you can see you can tweak this sheet to be quite exact in what you want. And then let's just say, well, actually, this is what I want to do. The net income margins have increased over time and have been increasing. So let's just say they get that to 38 now. Now it's a $290 stock, 11% discount. The reason for this net income margin increasing is because I was going to say AWS Azure service is a larger part of what they're doing, the subscription-based Office, everything like that. The net income margins are increasing because it doesn't cost as much to make the profit. So this is a number that can consistently go up 39, 40%, absolutely killing it, and this would drive the stock higher and higher. So let's just lower that a little bit. I think 39 is a fair estimate. And this would say it's that. Finally, we look at the Buffett Graham intrinsic value, takes earnings per share, expected growth rate, and the bond yield into account. Now, I think this is going to like this stock, and the reason for this is that massive growth rate and massive earnings per share. Yep, fair value of $390 a share. And then we have the Graham price, which is a margin of safety that basically says, well, if it was coming to this price, it is a definite buy. And what is this saying? Well, 293. So that is a massive discount. Both the models are saying it is a buy. Averages of the discount free cash flow models said it wasn't a buy, but with a little bit of tweaking, I do think those numbers are fair. And the Graham price says it's definitely a buy. So both of these models are saying it's a buy. Right, guys, thanks for watching. Please give a like on the video. I have been ill with COVID, hence why I have not been posting. There's a cough there already to prove it. I am getting better and I should be back posting more regularly. What I want to do is get this sheet on Patreon, and a lot of people have asked for it. Put it on a nice low tier so people can use it. It does take a lot of manual work, but one thing I am looking at doing now is trying to build a more automated solution for this. I'll just leave it at that for now. Let's just see if I finish it. Right, guys, thanks for watching. Please give a like on the video if you enjoyed it. Hopefully you guys have missed me, and I'll catch you guys later.